How's it going, everyone? Today's video will be an introduction on fundamental analysis. So, first of all, how does fundamental analysis differ from technical analysis? Well, it has everything to do with what is and isn't on the chart. So, if you think about it, a chart is just a monetary representation of an asset, right? Or a security. So, stocks, bonds, crypto, etc. The chart just tells you what the participants of said market believe the fair value is, right? But the chart, however, does not really tell you any detail about what's going on with the company, what's going on with the asset, what is the environment around it, etc., etc. Just based off of that, it can, when you see things like Nvidia going, over 1,000x over the last decade, the chart itself won't tell you that. Something is up in the real world, but the chart itself is simply telling you the price and the sentiment that the traders have and the fair value estimation that the market has for it. It doesn't tell you anything about the company and what it's doing, and that's where fundamental analysis kicks in. So we're going to keep this very quick. This is just going to be an introduction because the actual meat and bones of this is pretty dense. And there's a whole field of study to this, a whole school of thought and everything. And while I do use fundamental analysis a lot, it is also in combination with TA and stuff. And to be quite honest, especially in the modern day, a lot of FA is by vibes, so to speak, right? So, what do I mean by that? Like, that doesn't mean necessarily vibes as in, like, ooh, I like the feel of this company, or ooh, I like what this CEO has to say. It's like, for example, you know, especially in the Trump administration, let's say there's a big edge and alpha that you can get in seeing the connections and the relationships that said company or asset class big wigs have with the Trump administration that you can get you an edge. So that's what I kind of mean by vibes. And so that takes a bit of a different approach from all of this. However, it still ties in, obviously, and it'll be specifically in here. So let's get started. Fundamental analysis. It's just a method of, as I said, evaluating a security. So that's stocks, bonds, crypto. I include it in there. It's technically not, but by trying to measure its real fair value, its intrinsic value, using economic, financial, qualitative, and quantitative factors outside of the chart. There's three main aspects to it, and they can be defined by these words in parentheses. So, economic analysis, that would be macro. Economic analysis deals with the whole broader environment as a whole, right? So, think of it as the oxygen, the air that you breathe is the entire atmosphere. So, things like the world GDP or the country's GDP, right? America specifically, that's what's really important. Interest rates, inflation, deflation, if it exists. All these little things that comprise the economy at large would be considered macro analysis. I'm not going to get into specifics, but you know, generally, higher GDP means companies are doing better, means usually it's going to be more favorable for the company. Interest rates, if they are low, means that it is cheaper to borrow money and print new money. And so that increases the amount of money flow and provides a lot of liquidity to the market that can be really beneficial for companies and the whole macro environment. Inflation, generally, when inflation is high to a point, it becomes bullish for hard assets like gold, Bitcoin, and then, some highly high productivity returning stocks, like for example, the Mag 7, even though the PE ratios are high now, they are considered hyper growth companies, quote unquote, because they, you know, take X amount of money and turn it into X times a lot amount of money. And so you, as someone who's getting their money shredded by inflation, want that. You want to be invested in something that can get a good return on its investment. So that's economic analysis and macro. The second is industry analysis, aka MESO. Miso. It's Meso. Miso is, yeah, the Japanese food. So things like industry trends, competition, and regulatory environment. Let's get a little more specific. Industry trends. For example, the biggest meso trade of perhaps all time, besides maybe the .com bubble, has been the AI trade, right? If you were caught up in the transformer revolution and the technology that was being developed in the late thousands and then especially late 2010s when ChatGPT first came around with their breakthrough in transformers and everything, and you studied that, you studied those industry trends and stuff like that, that alone would have given you a bigger edge in your investing, in your trading, whatever, than all the TA and all these other economic analysis questions at large. In my opinion, even industry analysis is one of those things where once in the blue moon, it will become the most important edge that you can possibly have. Think of, again, the AI boom. Think of the .com bubble. Think of the railroad uh, mania, right? All these things are effectively um, huge booms that you could have gotten into had you done proper industry analysis and been in the loop on what is going on in a given industry. So that it's as businesses and industries and stuff like that mature and develop, industry analysis as a whole, meso, becomes less and less of an edge because they've matured and the alpha just isn't there. You can't extract as much positive EV out of it. But the once in a blue moon times where these opportunities do arise, the transformer revolution with ChatGPT, its first release, for example, that when you have opportunities like that, you have to recognize them and really jump all in because it will be a bigger edge for you than anything ever, bar none, whether it's TA, FA, macro, micro, etc., looking at the balance sheets, reading your PE ratios, whatever. The third is company analysis, so micro. So whereas macro deals with the environment that companies work in and all that, company analysis, micro, deals with the specific company that is working in that environment, right? And so you have to balance all three of these. So company analysis is going to be the most detailed level in terms of analysis, uh, in terms of day to day and everything, and quarter by quarter. It's probably the most important thing, um, because you're having to look at, you know, the company's balance sheets, its earnings, its sales, revenue, profit, PE ratios, debt, free cash flow, etc., etc. Right? This is the stuff that you're gonna need to be paying attention to most consistently if you're an investor in a company. You want to see, like, earnings come up and the stock drops. You don't know why. Well, you'll probably know if you read the earnings report, right? That's going to be the trigger. So earnings are going to be, or company analysis as a whole is going to be split into two camps. They go hand in hand. It is the quantitative and the qualitative. So quantitative deals with the numbers, as the name implies, right? So balance sheets, income statements, your 14K, your 13F if you're like a fund, etc., etc., right? All these different documents, and all the accounting lingo and stuff like that, that is the language of business that tells you how these companies are operating, how they're doing, and stuff like that. Um, you know, it also encompasses financial ratios, so things like price to earnings, your EBITDA, right? EBITDA, your earnings and revenue growth, your free cash flow, all of this. And there will be a video dedicated, a super long video that I'm kind of already working on, but I want to cover everything that deals with all the financial ratios and these terms. If you don't understand what they are, perfectly fine. Don't worry about it. You'll have plenty of room to learn and grow. And again, it also deals with revenue, earnings growth. Look, if effectively, if a company is not growing, then you have very little reason to get into it. Mainly because of the macro environment, right? The macro environment is dominated by inflation, as it always has been, but especially rampant the last several years. So if you're really not growing at a pace faster than inflation, then the market just plain and simply has no reason to give you the attention that you might want for that company, right? Now, last but not least, you have qualitative. This is perhaps the most like mm, difficult to understand. This is where, it's really vibes based. It deals with the company management, the board, the CEO, right? The business model. What is their moat? The corporate governance structure. So the company board, is it favorable to shareholders? How many times are they diluting the shares with offerings? You know, is the CEO an autist? Like these things are actually really important. You know, a huge part of my ASTS investment was just like watching videos of the CEO autistically talk for like 20 minutes on end with no like pause about how his satellites achieve so much better bandwidth over like SpaceX satellites. You know what I mean? Like, so qualitative, obviously, it has no objective measure. And again, that's where some sort of vibes based approach, a gut feeling, if you can kind of like really understand things and the people on an instinctual level, and if you're that type of guy, then qualitative analysis, uh, in the micro sense, and also just in general, um, is probably your strong suit, and you should lean into that, you know? But that is effectively a short little video on what fundamental analysis is. There will be videos on all three of these topics, from economic, industry, and company analysis, macro, meso, and micro. And I will also have two split up videos between quantitative and qualitative coming out in the coming week or two. That being said, thank you very much for watching. Have a great rest of your day.